Xavier, how you doing?
Wonderful. How are you doing today?
I'm good. I'm like you and I were just kind of getting a little caught up before the recording, and I was just saying how excited I am to have you on the show. The podcast has been renamed Intentional Growth, and what you have done in various ventures seems to appear to have a lot of intention behind it. And well, I guess you'll be able to shed some light on that. But I think Xavier, you were just telling me the story about you teaching a class at Oxford. So maybe just kind of go back, and I'd love to hear. I'd love to have the listeners hear that again, and just give us a background of like how you decided to start going, whether it was just on purpose or by accident, becoming an entrepreneur, and then how you ended up teaching that class at Oxford.
Well, thanks, Ryan. Yeah, it's funny I brought that up. I don't often talk about that Oxford class, but it was an awesome experience. And so maybe I'll start there, and then I'll go back to how I became an entrepreneur in the first place. So I ended up at Oxford. I got a scholarship called the Skoll Scholarship after I'd started my first company, worked on it for about 8 years. It's a scholarship funded by the Skoll Foundation for socially minded entrepreneurs to get their MBA and kind of think about the world's big issues and then go try to work on some. And so I had ended up being chair of the Oxford Entrepreneurs Network while I was there. And one of the things I saw was that a lot of people had an interest in entrepreneurship, but they didn't really even understand how it could all work, how they could kind of design the life they wanted to live and the work they wanted to do. And I think it had even been the start of what I consider kind of the fetishization of entrepreneurship, where there's this one very particular path of I want to be like the Airbnb founder, or I want to be Jeff Bezos, and so I have to raise lots of venture capital. I have to kill myself for a decade or so, and I have to just hustle it out. And so I taught this class called Entrepreneurship on Purpose, which was kind of my philosophy on it at the time, which was to be intentional about the life you want to live. So what are your priorities? What's important there? What do you care about in the world beyond your own, personal enjoyment? Like, yeah, you may love to mountain bike, but like, what of the world's problems kind of get you, and which ones do you feel, and which ones do you feel like you can do some, you could do something about with the right tools. Sometimes I ask people to imagine that you've already started something and you've already sold it for $1 billion, and now it's time to set up that charitable foundation. Like, what's it for? What would you set that up for? And if that issue matters enough to you, why do you have to wait for that kind of 1 in a million outcome to start doing something? And so it was kind of that intersection of your life and you're trying to do some good in the world, and then of course what is the economic engine of all that? I think in some ways entrepreneurship is an economic engine that can let you certainly live the life you want to live, work with the people you want to work with, tap dance to work every day if you're lucky enough. I think
you can literally engineer the entire life that you want with it.
It really is. It really is one of like the greatest insights in the world. And you and I as Minnesota guys, to get to the second part of the question. So I grew up in very rural northern Minnesota. There are more moose than people in the county I grew up in. We had people snowmobile to school because it was faster than taking the school bus.
Walking, smelling like gas.
Yeah, totally. Smelled like a 2-stroke engine.
Oh, that's awesome.
And they were like the cool kids, like the guys who could jumping over the snowbanks to arrive at class on time. So I wanted to get out of the small town pretty early. I was a computer nerd, and so I was always trying to buy stuff for my Amiga computer, and like games and bigger hard drives and whatever else I could get my hands on. And so I think the first thing, I was mowing lawns when I was 11 or 12. I leased a mini golf course when I was 14. I started building websites when I was 16. So I always kind of had the small time hustle going on. And then I had a startup in college too, which had a little bigger idea, which was like to build these kind of hyper local college websites. So I think we had 80% of Notre Dame on our website would have been year 2000, 2001. So I learned a lot doing that, and I coded most of that myself. So I learned a lot about
super cool.
just how to build stuff yourself, and like how to just have the tools and do it. And so I think the dot-com crash was very formative for me, because I was going to go kind of raise money and start, grow this college thing, and then everything just cratered, and I was maybe a little naive even about how you would go raise money for something like this, or what the bigger strategy would be. And so I ended up, I had this distinct idea in my mind that I was going to do something that was like social good for the world. I was always very politically and socially kind of active, and so that was always a huge priority for me. And I had no idea what it was, and then this kind of golden opportunity just hit me over the head, which was my friend. My roommates had left after college and left a lot of stuff, and so my friend and I were the guys who stick around the college town when everybody else goes to the real jobs.
Oh my God, totally me. I mean, I see for like an extra 2 weeks. I was like in denial that I had to go to the real world.
Oh, 2 weeks? We stayed for 2 years.
All right, you jumped me for sure.
So we were playing ultimate frisbee. We were hanging around the college town, and we sold these textbooks. And I remember him asking me if I knew anywhere on the internet you could sell textbooks, and I was like, "Oh, half.com. I heard people are on there." And so he posted on half.com and was like, "Dude, I just sold $300 worth of textbooks overnight. Like, this is crazy." And so all of a sudden, he and I were obsessed with getting textbooks. We would get them from all our friends and try to buy them, even from, like, there was a donation bin at the library. We'd try to buy that. And we realized that, like, these books that wouldn't sell for anything to the bookstore, you could sell for $50 on the internet.
It was a highway robbery with the bookstore, man. My favorite story, Xavier, is like, so I went to a Catholic school, and
I did too. Which one?
St. John's University.
Of course. I love St. John's. Yeah, so I went to Notre Dame. That was my Catholic school.
I went to Notre Dame in Australia, actually, for a semester.
Yeah, we had an exchange there.
I went to a couple classes.
Yeah.
Yeah. The beach was across the street, so I got a little bit of reading done. But I was in the bookstore, and like I could only see the opportunity that you guys saw, because I was returning like $2,000 worth of books, and they gave me $100 that I was going to go buy Busch Light with. And then the guy next to me was returning it, trying to sell his Bible, and they were like, "Sorry." I'm like, "What did they have a new version of the Bible that he can't get his almost full refund back?" Oh, so funny. Just a total scam.
It's so absurd. And so, so we found out that on the internet, it only takes one buyer in the whole country to use that old edition for class. And even a lot of professors were starting to say, yeah, you can use the old edition. And honestly, students I know this is a deep secret, but students are lazy sometimes. And so we would get $150 books thrown in the donation bin. And so anyway, that was the business we started was basically partnering with charities to run college book drives. And so what we realized was that a bunch of people would just give their books if there was a good cause, and they didn't have to stand in line. And because we didn't really have any money to buy textbooks, we didn't know which ones to buy anyway. It turns out there's like these closely guarded pricing guides that the big textbook companies have, where they have actuaries going through every single textbook and assessing supply and demand. And so we started this company called Better World Books, and the original thing that got it started was just a college book drive. Like, our startup cost was $35, and our first book drive got $20,000 of sellable books just from the campus. And so I spent a lot of my early 20s like barnstorming college campuses, which was an awesome way to spend your early 20s, and setting up college book drives.
Yeah, we're talking about engineering the exact world that you want. You checked a lot of boxes.
Yeah, it does exactly it.
Wait a second. I get to help the world. I get to go to college campuses. I get to make a bunch of money, and people, just like check.
Yeah.
So, because you've got multiple ventures that have common themes in them, and I want to get into some of the mechanics of what you did with these companies too. But like, I'm curious, like in this timeline, you talked about the class at Oxford, and then there's, you've got in, I don't know if Better World Books was the triple bottom line, but you got some of these conscious capitalism, a lot of these themes that I want to dive into, and where in your process as an individual, an entrepreneur, did you start saying, okay, here's how I'm going to get the economic engine and the life that I want, and how did you line all those up? I mean, like, where did that start to formulate?
Well, I was always, it's really funny, but I always just kind of had faith that I would be okay economically. And
Hmm.
in a weird way, I decided that, what I valued really highly was independence. And probably what I valued second most highly was working on something that I felt in some way that was something bigger than just like a hustle, or a way to
Hmm.
make quick money. And so I think that I really came of age as a business person, not as like, how do I become a millionaire as quickly as possible, but how do I just build something? Like, how do I build something that works and that grows? And so Betterwell Books, I mean, we bootstrapped it to, I think it was 16 million in revenue 4 years after we started,
That's
just
awesome.
selling books on the internet. And we, in Better World, really, its revenue grew, I think, for 15 straight years. It's still a pretty good sized business. We just sold it actually to the most perfect possible place it could land, which is a charity called the Internet Archive that is endowed by a guy who sold his company to Amazon in I think '99 for stock. He actually sold Alexa to Amazon, which is a whole other fascinating story.
Whoa.
And Alexa at that time was a web crawler. So it actually still is a giant web crawler, but they took the brand and put it on an entirely different product. And so Alexa, very few people know this bit of trivia. This will drive traffic podcast. So Alexa is actually named after the Library of Alexandria, and that was the original vision of the founder of the company who sold it to Alexa, was that he was going to build the library of everything ever. And so then when he sold his company, he talk about engineering your purpose. So part of his deal with Bezos for selling his company was that 6 months after Amazon scrapes the data, it has to give it to him for free, so that that data can be made as part of a public library that anybody can access of the internet. And so
Whoa.
so if you ever use the Wayback Machine to view an old website that's no longer up, that's all powered by that deal and that conversation, which was essentially, we're going to build an archive of every website ever, forever. And then on top of that, every book ever, every LP ever, everything ever, which the Internet Archive is busy doing now, 20 years after that deal happened.
So the guy that you sold, the charity that you sold to that started that charity is the guy that is all about this.
Yeah. So this guy
Okay.
who had founded Alexa basically endowed the charity with his fortune, and then Better World Books ended up as part of it because we'd set up this mission around literacy. And at the point we sold it, we had partnerships with about 8,000 libraries. So we were not only getting books from college campuses, but we were getting them from big and small academic public libraries. Something like 35 million books a year coming in the front door in the business. And that's a great thing to have if you want to build a library of every book ever, because some of those books can then be digitized and stored in the library rather than resold.
Isn't that amazing? I mean, I just could only think, it's so funny is like on this topic. And I think it probably has a lot to do with why I do a podcast and why I listen to so many books. But back when I was like in elementary school, I was a terrible student because of my energy and ADD. And I was like, I just want my superpower to be able to download a book into my head, like all books. And like, we're close. I'm like, it's probably going to happen someday. But like, that's amazing what you can have with all that knowledge. I mean, and like, maybe this ties into, kind of the book for a book and what you're doing. Cause well, maybe some context behind this, Xavier, some of these questions is like, there's so many entrepreneurs that I've interviewed over a couple hundred interviews, and all the people that I work with, that they start their business. I'd say a general theme is they start their business with trying to solve a problem, or they like their employees. I mean, there's very few people that are just total like cutthroat capitalists that are their founders, right? They start for some reason. I don't think they articulate it as well as you do, or you have, or certain people do, which ends up with, the regret after they sold, because they sold the wrong person that did the wrong thing with their baby. That, I mean, like, look at the mission of the people that you're sold to, like that's amazing, right? It makes you feel good.
Right.
So, like, how did you back into that, and like, where did your mind start to shift as you were, just going from college to college towards, okay, now I've got this economic machine that's, 16 million in revenue. Like, how did you start to build the infrastructure to make sure that you got what you wanted, what you just described?
So I think it's a really important question, and it's something where, like, a lot of businesses, a lot of executive teams, they kind of get their arm twisted into doing mission and values, or mission, vision,
Yeah.
values, right? Whatever you want to call that kind of holy trinity set. But I think really, not, you can't only get your mission and your vision and your values down in some piece of paper, because nobody's going to see that. Like, you got to live them, and you got to,
Mm-hmm.
and you've got to take the time to think about that. Like, I think most entrepreneurs do have values behind what they do. They're creative people almost by definition. And even if their values are like, I want to make a bunch of money so I can be independent and live the life I want to live. Like, I think that the step that I don't see all of them take is to say, okay, well, even if that's the value of the company, like, think about how other people who work for the company might also want that. And so,
Mm-hmm.
if you do have something set up just to be an economic engine, it's okay. But think about how you can share the wealth then with more employees. And there's all sorts of good thinking on that. And everything from profit sharing plans to open book management to employee stock ownership plans. There's so much good stuff about how you can share the wealth and align your employees to make you more wealth. And if you do have a broader vision beyond that, whether you believe in a more sustainable food system, or you name it. In Better World Books' case, we actually had a lot of pressure early to get that right, because we were a for-profit business going out and soliciting donations, right? So that could be viewed in a negative light or a positive light. And so we pretty early had to say, hey, if we're going to do this right, if this is going to be sustainable, we have to align ourselves with impeccable nonprofits who deliver on what we're promising, which is that if someone drops a book in this box, that we're going to increase literacy around the world. And so we partnered up very early on with a group called Room to Read, which is now a really internationally known nonprofit. Another one called Books for Africa, which is we were their biggest funder for many years, may still be. And together we were the leading donor of college textbooks to Africa. So it's amazing what you can do when you get you really get specific and say, hey, this has got to all hold together. This can't just be something where we say we fund literacy and then someone asks how, and you say, well, we give a little money to this charity. It's got to be a lot more specific and intentional than that. And I guess I think about that even more, with what I'm doing today. What we call it Enduring Ventures, and the goal is to be the buyer of businesses for people who really don't want to sell. Who want their business to continue on, to not be something that's kind of bought and resold, stripped down for profits, but to have a long-term horizon. And the first thing we do when we buy a business is we restart from the values from day one and say, why should anyone care about this business? Why is it here? And how do we make sure that our customers know what these values are, that resonates with them? Because also that's mission insurance.
Mm-hmm.
We had an investor early on who was a very social focused investor who said, the reason I'm investing in you guys is because it doesn't matter who buys the business, they can't take the mission out of it. It's baked into the supply chain of the business, in the partnerships with libraries and nonprofits, and it's baked into the customer base with them knowing the brand and choosing it.
I like how you said that the mission and vision is baked in. It's really interesting because like you can, it's hard to especially coming from your computer guy. It's like, I like so many people want to like make an algorithm out of this and quantify it, but like it's really truly like sometimes intangible, right? Like you can't really see that stuff on the spreadsheet. Like you have to experience it in order to understand it.
No, you really do. And you know where you see it in the spreadsheet, I'll be honest, is you see it in outsized profits in the long run and outsized growth in the long run. And I think that's something a lot of spreadsheet focused business people don't get, because it's really easy to measure trailing earnings. It's really easy to measure the value of assets. It's really hard to measure brand value. The place in your customers and employees' hearts and minds where your business lives. And that is truly the thing that differentiates the really great businesses from somewhat mediocre ones in the long run.
So let's, which I agree with you too, the wholeheartedly, because I've had Alexander, the CEO of Conscious Capitalism, on my show, and just after reading that book, the crazy, like, what is it, cognitive dissonance or whatever, I'm looking for the right word, the paradox that I had in my head over my life is like money, 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 but you can't do good with it. And now over the last 10 years, the conscious capitalism movement, they're showing that you can care about all stakeholders. And I think especially in right now, we're starting to realize where the cracks in the foundation of the economy, when there's just debt loads everywhere and you're having to sacrifice stakeholders because you can't play the long game right now. And so when you were at the business, when you were doing the book business, like how did you what kind of exploration did you do to figure out how to mechanically make this work, and to do it from the point where like you can hold those two beliefs in one, right? Where like I can do good without sacrificing my profits, but also make money, because otherwise you're going to constantly have to go find money from other people that are still your owners at that point. So like, how did you mechanically put that thing together, and what are the different things that you explored?
Yeah, you're right. It's a really perceptive question, and that took a while. So one thing we did early is we were literally the first B corporation. So we were the first one to sign.
Were you really?
Yeah. So we signed the Declaration of Interdependence, and I don't know what that was, maybe 2005 or something like that. And so, I'd heard Jay, the founder of B Corp, speak at an event before they had launched, and was just like, oh, that's what we are. Because we had also been looking for like, okay, what, other than a few companies in natural foods, and then, seventh generation, a few companies like that, there really hadn't been a lot of companies. There hadn't been a way to kind of classify this thing that we were. And we had people ask us all the time, are you a nonprofit? No, we're a business. And I think what we made some mistakes early on. And here's the funny thing, we actually shared too much with our nonprofit partners. So we signed up for revenue shares that seemed like they made sense when we were collecting books at one campus. But then when we were collecting them at 1,000 campuses and shipping a lot of those books across the country, and we needed an organization to organize all that, we had to look and say, well, the absolute number has gone way up, but the share actually has to be more reasonable. And so I think in some ways it took us a little while to say, not even what is the right level of profit, but to say, okay, what is the value that our partners are providing us? And let's get as specific as that. Like if they were running these book drives themselves, how much would we pay them? And
Interesting. Yeah.
So
yeah, like a cost of goods, and just said like, this is exactly what would be in my balance sheet, right?
Exactly. And so that was what we ended up doing, was building in our partners as a cost of goods sold. And so we just said, look, there's clear part of value. So rather than, we'll donate X% of profits, well, profits can be manipulated in all sorts of ways. And so, what can't be manipulated is cost of goods sold. That's just baked right in. And so that was the fundamental engine that we were able to donate over $20 million and still stay profitable every year was by doing that.
Oh, that's so interesting. I mean, because you're literally tracking what, like, if you had that cost. So let's go back for the listeners that are not familiar with B Corps or not familiar with the triple bottom line. Can we hear it from you on what those actually mean and how mechanically they work?
Yeah, and I'll take those separately. So B Corp, I really like. Almost every company should do it now. You can easily sign up as a B Corp now as a Delaware corporation. So just to be clear, a B Corp is a C corporation or an LLC or even an international company. Any one of those could be B corporation. Basically, what you have to do is two things. So you have to put in your articles of association or incorporation that you'll take all stakeholders' interest into account. And that's very, very important from a corporate governance perspective because it protects the board of directors from being sued if, for example, they turn down a higher financial offer because maybe the business is better independent, or because there's another offer who will keep the mission intact, for example. And the second thing B Corp is about is transparency. So you take a big test on all these different metrics. It's not expected that you're going to do everything for everybody, but it's just trying to understand where, how structurally have you set up the company? Do you have employee profit sharing, for example? Do you provide benefits to your employees? Those sorts of things. And then your assessment on this is made public. And so what this does is it gives you a kind of transparent score to say, no, we're not just talk here because anybody can market anything. We actually submit ourselves to a third party to verify that we do what we say we do. And so that was kind of the original thesis of B Corp, was that it's good businesses, not just good marketing. But there's some very, very profitable B Corps out there. And I forget the name of this one, but I think now there's a few public ones as well. So absolutely, you can still be super profitable. I know a lot of B Corps that are very, very profitable.
Isn't Patagonia B Corp?
Yeah, Patagonia's B Corp. That's a very valuable business.
So what was isn't there's tax benefits too? It spaces me right now, but because there's a benefit for doing what you're doing, right?
Not really. There's not an explicit tax benefit. There are some specific benefits in some specific places, but I wouldn't do it as a tax trick. I shouldn't call it a trick, but there's
I know what you mean.
There's stuff like employee stock ownership programs that have huge tax benefits that are worth figuring if that's a route you want to go down. But B Corp really is, it's a way to brand what you're doing, and it's a way to also be a part of a community of businesses that are doing the same thing. So one interesting knock-on benefit, especially for small businesses, is I've seen a lot of them get a lot of business from that community, because people in that community are saying, well, I would rather do my incorporation through a B Corp, for example, which is there's a company in Delaware that's a B Corp that does incorporations. So it is a way where people, the conscious business community, can find service providers who also check that box.
So then, what is the definition of the triple bottom line from your perspective?
Well, I'll be honest. I don't love the triple bottom line nomenclature because it's the traditional triple bottom line idea, and it's a nice idea, is that you don't just have one bottom line of profits. You have three bottom lines of environmental, social, and economic, generally, or sometimes people will choose those differently. I think it's a useful tool to kind of open people's eyes to it, but I think it also creates a lot of controversy, if I can be honest, because when you're managing the business, let's be honest, most businesses that say triple bottom line, they have a monthly review of their profits, and
yeah, it's like there's a triple bottom line, but there's a pie chart, and those three have different slivers.
Well, yeah, and so
importance or whatever.
So I find it to be much more meaningful to make whatever environmental and social commitments you want to make. Just make them publicly, make them to your customer base, and then be transparent about how you're doing or not doing on them. And and then you don't have to say to people, well, we have an environmental bottom line. Well, I mean, if you took that to its logical extreme, you'd be out there, cleaning the ocean every day rather than running your business. And, so it's to some degree, I think that if you're saying, well, we're going to be a carbon neutral business, great. Like, make that statement on your website, tell all your customers about it, build it in your marketing, and then actually be transparent and do the homework to see if you're really living up to it.
What I find is interesting too is going back to when you were in the business and you are lining this economic machine of making profit, and that it makes so much. Honestly, that was the clearest I've ever heard anybody describe it to me. Is you just built it into the cost of goods, so you can actually financially report and predict all this stuff.
Yep.
Makes sense, right? Like that, you just put what was important into the cost of goods, so therefore every time you sell, you know exactly how much is going out to the people that you have deemed important. And so Xavier, putting the the desire for well, not desire, maybe it's not the right word, but like you have to build an economic machine, right? Like you have you ever read the book? It's called God, it's like pulling people in through you generating profits, right? You have supplied a good or service to the economy that people deemed important, and you are doing what you will with the profits. But you have to have a sustainable business to accomplish your social or environmental goals, right? You can't, because like before the motto was charity begs people for money, people that make money don't care about anybody else and they give it to charity, right?
Yep.
Like, but you've combined those in a way that like you said, the excess for profits over the long term happens when you do that. How do you like how did you as an entrepreneur, did you ever get criticized of like, oh, you're using this for branding and you're not actually doing it, or like, because there's so many technical, or perceived conflicts with those two? How did you describe that to the world, and how did you live that?
Absolutely. And it's funny. In one of the first press pieces we had on Better World Books was on All Places, on Marketplace on NPR, and we were kind of used to getting puff pieces about us. Like, isn't this great? These guys are promoting literacy around the world, and this I was actually a very critical segment. And they brought somebody on who knew nothing about our business. They were like, oh, well, for-profit shouldn't, it's really tricky business to work with nonprofits to collect donations, blah, blah, blah. Why don't they just pay people for the books? And so it was kind of this, it was definitely a wake-up call for us to say, hey, we have to, we have to stand and be proud of what we're doing here. And the way we're going to address this is with transparency. It was amazing how well transparency works. Because once you actually said what the deal was, then everybody, like, people could make up their own opinion on it, but they didn't have to work with you if they didn't, if they thought the charity wasn't getting enough money or whatever. They certainly didn't have to keep working with you. One other aligning tool, and this is actually the other major business I founded before Enduring Ventures. So after Oxford, I was chairman of the book-selling company. I started this business in Africa because I'd spent a lot of time in Africa through our literacy work to bring solar to the mass market in Africa. So the idea was basically to take the way prepaid mobile phones had swept across the developing world and bring that to small solar power systems so that people could pay for energy a little bit at a time as they use it. And so that business is we raised a ton of venture capital because kind of was necessary. It's a hardware business. We finance our customers. I kind of knew that was the bargain from the beginning. And so,
how did you? Sorry to interrupt, but you might get into this, but should you raise, like, was it 70 or 100 million or something like that? And I don't know if you're going to get into, like, when you take money from people, they can tell they tend to have a voice.
Oh,
so I don't know how you.
Certainly do. So I mean, we raised over $100 million in equity alone and $50 million in debt and six rounds of financing. So certainly half of my job in that business as CEO was raising money. What I felt, and we can come back to the pros and cons of venture capital, but that was extremely mission driven for me, because not only we were recreating a business, we were creating an industry. And so if you look today, the average Tanzanian in Arusha, Tanzania, has probably 5 pretty decent companies they can choose from who will supply them a financed solar system that'll work pretty well. And that was, and probably 80% of them have a solar panel on their roof if they don't have an electrical grid connection. And
that's so cool.
And that was not the case when we got there. I got to take a trip to Bangladesh, which had a very successful solar program, and was just shocked to see half the houses had solar panels on them. And I kind of, I felt like I'd seen the future, and I came back and was like, okay, this could totally happen in Africa. It's just gotta go do it.
Mm-hmm.
And so I think if I can be honest about that business, I surrendered myself a bit to the fate of venture capital almost in day one from that business, because I just knew there was no other way to do it. But I felt like it was something that I wanted to work on that was going to be, an incredible growth opportunity for me, and something good for the world. I honestly, venture capital, I think when people have bad experiences, it's mostly because they don't understand the deal. And
yeah, they don't understand what they're. Yeah, I could see that wholeheartedly.
there is the deal is not we're going to invest in your company for you to build a sustainable, profitable business over a long period of time. That is not the deal. The deal is we've been given some money by our limited partners, and the only way that we make them money, and that we make, because our business is so risky and we're gambling so much money, the only way we really make them money is by the power law, which is that every investment we make has to return our entire fund. And so if I invest $4 million in you out of a $100 million fund, I am expecting there's a reasonable probability that that will turn into $100 million in 5 to 7 years. So if you know that's the deal, and you're building the next great teleconferencing app or whatever you're building, like, take venture capital and take your swing. Just don't expect that it's your company anymore, right? Because it's not. It's a sort of partnership where you and your venture capital investors are taking a giant economic swing together, and make sure you get paid a decent salary to do it while you're doing it, because your upside will be highly variable, and will be they get their money out before you do. So you just have to know the deal.
So when you, and especially and then they want a liquidation event, right? And to go back to, maybe because I know we're running short, we got about 10 more minutes left, is whether it's the book business or the solar business, and your desire to make an impact on the world, you got money tied into this. Where does it line up with, okay, I know at some point this has to transition and I want to think about it correctly? So we've got these 5 principles that we've created in our intentional growth framework. And the first one is knowing what you want. And the second one is understanding your financial targets, and kind of tying those together. So that way you have the ability to weigh out your options if you don't like the potential buyer, the potential deal structure, whatever it might be. What was your process on either of these to say, at some point, I'm going to have to make sure that I'm assuming, Xavier, you had this vision of what you saw your company being like without you. And maybe
Right.
you did or didn't. Can you
Right.
explain how you kind of aligned all of those different things?
Right. I think that, since they were 2 very different businesses. So with the book selling business, Better World Books, we took 1 round of financing. And even though our investors were amazing people, we, totally mission aligned, we never should have taken money for that business. That should have just been a small cash flowing business that runs forever. That would have been the optimal strategy for us. And in some ways, we were kind of forced into, eventually making a sale of the business. Not in a bad way, but it would, a second you take.
Is it because they needed their money?
Yeah,
they wanted the money.
Yeah. There's a timeline attached to these things, and sometimes in that situation there was a required timeline, so we had more pressure. In some circumstances, there's not a required timeline.
Did you do a PE recap then, or what would you do?
So we basically sold to. The charity actually had some resources, mainly because its founder had made a bunch of money in technology. So we were able to do a sale, which was what worked out for all parties.
So that was when you eventually sold the company. And I'm curious on how you found them. But when you took on the investment, curious if there was a triggering point that, I don't know if you guys were heavy in needed cash to bring on an investor, or was that investor what was it? Because sometimes when people bring on investors, it's either a wealthy individual that's got very loose, terms and conditions, or there's a professional investor, like a family office or a private equity firm, the first time before they eventually sell. I'm just curious on what was.
Yeah. So I guess what I can say about that is that we didn't really need the money, but we were still, there wasn't a lot of money in the bank account. We were reinvesting every dollar we got into growth. But I don't think we had anybody saying, "Hey guys, why don't you just slow down to 25% growth a year? Then you won't need to raise any more money." We were going at 40 or 50% a year, and then we were in some ways exceeding our sustainable rate of growth, and so we just kept eating up capital rather than building a reserve. And
I have a podcast titled "Growth Consumes Capital." It's people think it's just super easy. It's but somewhere the money's got to come from, right? Your receivables, your line of credit, or your own pockets.
Oh yeah,
it's very difficult to sustain that kind of growth on your own cash flow.
It really is. It really, really is. And they had a professional on their side who actually only did one deal with them because it was kind of a small fund. But she used to be at Intel Venture Capital, and she was very, very good. So honestly, she got the better end of that deal and got some terms in there that basically forced us into a liquidity event, because they were concerned as well, because they were essentially buying a minority stake in a founder-owned company that was profitable. And so they did need some forcing function to get their investment out. I think if I could do it all over again, I've just learned so much since then about structuring. And I honestly, the thing that scares me the most for entrepreneurs, like there's a message to entrepreneurs out there. If it's your first time doing a deal, a venture capital deal, a private equity deal, do not do it by yourself. You are not that smart. You think you are, you're not. You're just not. Find somebody like me who's been through every kind of permutation, and and have me help you. Some of us we don't even cost money sometimes. We just want to help entrepreneurs.
Wasn't it funny, Xavier? Like this is 200 plus episodes, and I've been doing this for a living now for 6 years, and I still wouldn't do it myself. Like that's how crazy complicated the game can be. I mean, like it's just, yeah, it's crazy.
It really is. And honestly, I think selling a profitable business, there's even more moving parts there than venture capital. But venture capital, one term that you don't fully understand can just nail you. I mean, can absolutely change the future of your business. And so if you're not fluent with all those terms, not only knowing what they mean, but knowing why they're there. One thing we did with the solar company is we actually wrote our own term sheet. This is one thing I learned from one of my entrepreneurial mentors. So he writes his own term sheet. It's a fair one. It's not tilted too much in either direction, but it's one where he knows all the terms. He's comfortable with all of them. If anything, it's a bit entrepreneur friendly. And then when he raises money from venture capital, he says, well, if you don't like the terms, change the price. And so he just basically says, look, there's one variable here on my term sheet, which is the price. So please reflect in the price you'll offer for the shares, whatever you think of these terms. Because a lot of what happens in traditional venture and private equity deals is they lead with the price, and then they just grind on the terms.
Yeah, I'll pay you $200 million for your company, Xavier, but it's going to be over the next 2,000 years at 0% financing.
So yeah, 100% seller financed. Exactly. That's it.
So I know we're running a little short here. So how did you, going back to kind of that main theme of how did you determine that charity was the buyer to continue the vision? I mean, did you take it to market with a investment banker? How did if you got any advice for the listeners that are thinking about aligning all these things when they eventually how did you connect those dots?
Well, I've got two bits of advice on that, especially because now I've been on the buy side for a little while, and so I've seen a lot of different businesses, and how the founders are managing their transition. And so, one thing I would say is if you are a founder or an owner, your number one job is to work yourself out of a job, even if you like your job. And that's the thing that I think, even if you love your business, you love what you're doing, at some point, somebody's going to have to take that over. And in a perfect world, you're coming to the office when you want, you're working on whatever projects you want. But there is somebody fully capable there who is some share in the upside. I think that's important too, or multiple people who know how to do everything you know how to do. And a lot of times you actually, as a founder, you just need to step out of the room for a while. You need to go on vacation for 2 weeks so that, as we talked about kids, if you're always there and you're always answering all the questions your kids ask you, they'll ask you 2,000 questions a day. But if you tell them, hey guys, you have to figure this out yourself, most of those questions get solved. And a lot of times founders or owners have such a big personality, they take up all the oxygen in the room, even when there's other smart, capable people who can make decisions and can manage things maybe better than they can. One of the most successful guys I know still owns 100% of his company. He's been retired, I think, 13 years now. And he swears the smartest thing he did was stop going to work and let his team take over.
Mm-hmm.
And And so on that side, I think, I think it's very, very important, because when someone wants to buy a business, if the business all revolves around you, then you aren't leaving when your business is sold. You're locked up for another 3 to 5 years on an earnout, which I don't even understand why you'd sell your business then. I do not even understand that.
So, yeah. Well, usually it's because they literally have to, and then by the time they get to the deal table and they're going over those terms, it's like shit.
Yeah, exactly.
Like, yeah.
Exactly. So we did the private equity shuffle too when we were selling the business, and we certainly experienced how obnoxious that process is. The amount of I think if I ever had to deal with a private equity firm again, I'd make them pay me by the hour to do the diligence. Say, okay, I'm just going to bill you like a lawyer, because I think
Put this into your dead deal fees.
exactly. Yeah, you guys have a budget for this, so I'm just going to bill you. And every time you ask me for another report, that'll be another $2,000, and it'll be amazing how quickly they would come to a decision or not. Because so many private equity firms, they just analyze things to death, and at a certain point, it just becomes paralysis by analysis. So I would say that often the best acquisitions are actually obvious. You already have a relationship with the acquirer. You've built that trust and that relationship over years. I mean, we knew the Internet Archive for probably almost a decade at that point. We'd given them free books. We'd done favors for them. And so, when we needed something to happen, like, we had a clear faith. It was like, as long as we can figure out something that takes care of all our stakeholders, like, there's no question this should be the home for this business. We're gonna build a legacy here. We're gonna build the library of every book ever accessible on the internet. Like, that's something that's never been done before. And so I think for us, as long as we could make the deal work, that was important. And honestly, my bankers were really, really good on that, and they put in the work to get there.
So Xavier, the quick question on that is, because, like, I've tried to describe this to lots of people, and I think if people have been following the show long enough, they'll have gathered it, or if they've gone through our digital course or the boot camp, the ultimate freedom, in my opinion, is when you have the ability to sit down and say, I've got 10 offers here. Here are my financial targets, right? Like, this is how much I need to net at closing. Here's what I'm willing, here's what I need personally. And then there's another list of, here's the things that I want for the business and for my legacy and for my stakeholders. And then being able to cross-reference all those with the 10 different offers. Like, did you intentionally do that? Did you have the ability to analyze that? I think, because then it's the ultimate goal to say, hey, I don't want to have this extra $1 million because they're going to destroy it, and I'm going to get the extra $1 million, but they're not going to build a library of everything. I mean, yeah, come on.
Right, exactly. And I think we did to some degree have that. I mean, we hadn't built such a good business that I think if I could do it all over again, we would have built an even stronger business. Not even by being smarter, but just really just focusing on the fundamentals of the business more. Just really getting clear about the things we need to be really good at and building those things over the long haul. But that being said, we were a profitable business and had a lot of customers who love us. And so, so it was nice to have a commercial offer and a non-commercial offer. But, an investment banker never would have thought of in a million years of calling up the Internet Archive and see if they wanted to buy the business. That was, that was a relationship that we developed. And I think a lot of entrepreneurs don't do that. Like, you learn about people when you're working with them, whether they're the kind of people you want to keep working with. And I think to go through an acquisition process, you better like the people on the other side of the table at the end of it, or there's enough places where it's going to fall apart because you're going to get in an argument over something. There's always something.
It's people.
It's people, right? It's people, and so I think founders, setting those financial targets is important. And I'd also even ask a deeper question: is ask why of the financial targets. Like, will 8 million really make you 50% happier than 4 million? I don't know. I feel like founders should always, to the extent possible, build a business where it would run perfectly and give them a lovely stream of earnings forever without any need to sell. And then if for whatever reason they want to sell, I see a lot of founders sell just because they're stressed out because they haven't gotten themselves out of all the muck. They're still
so true. Isn't it funny, Xavier, when you really think about it, you're like, okay, so I get to pull myself out, make a more valuable business, have more choices, and do what I want. Like, why in God's name wouldn't you do that?
It's so true. It's real.
I think it's a different podcast for a different day, but I think it's a lot of desire for affirmation and ego, and or the ability to not be or not being aware that this is a thing, which is kind of the point of the show, right?
Yeah. No, I think it's. I mean, I really see it. I'm working with a business owner now who still answers the customer service calls in the evening and the weekends, and it's like I can understand how that keeps you close to the customer, but man, that's that's a heck of a lifestyle sacrifice to make at a certain point when there's really no financial need to do that. It's just kind of, I think and I know you talk about this a lot, but a lot of business owners can really be penny wise and pound foolish when it comes to this stuff. Playing accounting tricks rather than trying to show strong, consistent earnings. Not hiring that one or two more people who can actually show that the business runs without its owner working 16 hours a day, because your market of potential buyers for the business, if the owner's working 16 hours a day, is dramatically smaller. It's basically only people who want that.
Let me give you millions.
Same job, right?
I was just going to say, let me give you millions of dollars for that stress.
Yeah, let me buy myself a terrible job. Yeah.
I know we're over the time limit, Xavier. If there's, maybe two questions. Well, one is for you. What does the word intentional mean for you? And then the other one is, what are the best places to find you and learn more information about what you're doing?
So the word intentional for me, it's such a great word. It's something I spend a lot of time on. I try to wake up each day and set my intentions for that day, because it can be really easy to just dive into the fray of meetings and emails and phone calls rather than saying, hey, what is, I heard this great thing from another entrepreneur who said, what is the one thing I can do today that would make everything else easier or irrelevant? And I think that, being intentional about that, and then also being intentional about, hey, my kids are growing up fast. My health doesn't take care of itself. Not just abstractly prioritizing those, but concretely prioritizing those, usually with blocks in the calendar, is a big thing for me. So in terms of where you can find me, I'm absolutely terrible at Twitter, but I'm the only Xavier Helgesen on the internet. So if you can spell my name, you can find me on LinkedIn. I have a lot of people on LinkedIn. Enduring.ventures is my new website. If you are selling a business and you don't want to deal with jerks, give us a call. That's our new slogan.
I love it. That's a real differentiator sometimes. Xavier, I'm so happy you came on the show, man. I had a blast.
Okay. Thank you, Ryan. I really appreciate it. I really appreciate you getting me out to your listeners. So thank you for everything you're doing.